Hello everyone, and welcome back to the channel. Today, we're discussing Brand Engagement Network, better known as BNAI. The stock is currently trading around $12.15, and many investors are asking whether this is an opportunity to buy the dip or whether the decline is a warning sign. Some investors are even wondering whether BNAI can eventually reach the $60 level once again. Let's take a closer look at the company's fundamentals. Brand Engagement Network is an artificial intelligence company focused on developing AI-powered solutions designed to improve customer engagement and business operations. Since AI remains one of the hottest sectors in the market, many investors are paying close attention to companies operating in this space. However, excitement alone is not enough. Investors must carefully examine the company's financial strength before making any investment decisions. Let's begin with the financial numbers. The company's market capitalization currently stands at approximately $82 million. Revenue is only about $275,000, while annual losses have reached approximately $8.6 million. Earnings per share stand at negative $1.48. These numbers indicate that the company is still in an early growth stage and has not yet established a sustainable business model. Despite the risks, there are a few reasons why some investors remain optimistic. First, the company has a relatively small float of approximately 4.28 million shares. Stocks with a low float often experience explosive price movements whenever positive news reaches the market. Second, artificial intelligence continues to attract significant investor attention. If the company announces new partnerships, improved financial results, or strong revenue growth, the stock could move significantly higher. Now let's move to the technical picture. The area between $10 and $12 appears to be a major support zone. The first significant resistance level can be found around $20. If the stock breaks through that level, investors could then look toward the $30 area. The most important resistance zone is located between $55 and $60. This means that the stock would have to overcome several major obstacles before reaching that target. According to available analyst estimates, the average one-year price target currently stands at $20. This suggests an upside potential of approximately 65% from the current price. While this target is encouraging, investors should remember that analyst estimates are never guaranteed and can change rapidly. For short-term traders, the current price range may offer an attractive opportunity, provided that proper risk management strategies are used. For long-term investors, patience may be the better option because the company continues to report losses while generating relatively limited revenue. As always, investors should avoid putting too much money into a highly speculative stock. My answer is simple. A move to $20 appears achievable if business conditions improve and investor sentiment remains positive. A move to $60 is possible, but only if the company dramatically increases revenue, reduces losses, and continues expanding its business. At the moment, such a scenario remains highly speculative. In my opinion, BNAI is a high-risk, high-reward investment opportunity. Bullish factors? Low. Float, AI exposure, and strong momentum potential. Bearish factors? Weak revenue, continuing losses, and extremely high volatility. My overall rating for BNAI is 6 out of 10. Thank you for watching. If you enjoyed this video, please leave a like, subscribe to the channel, and let me know in the comments whether you think BNAI is heading toward $20 or if it can eventually reach $60. See you in the next video.